Welcome back. In today's video, we're going to be doing something we haven't done in quite a while, and that is price predictions. We're going to be talking about the top DeFi protocols, the top real-world asset protocols, and the top tokenization protocols in the world to understand where they stand now in the second half of 2025, where they're going in the future into 2026 and 2027, and also understand where the regulatory perspective and the Wall Street perspective is on this, because you guys can see right here on this video from CNBC that the SEC chairman, Paul Atkins, right here, says tokenization is an innovation, and my whole goal is to make things transparent. And so before we get to his video, what we're going to be talking about in today's video is really high-level overview of the top DeFi protocols, real-world asset protocols, and tokenization protocols, and understanding where this kind of lies in with our investment thesis and portfolio, and then understanding kind of where these protocols are going in the future from a price perspective. And so, yes, we are going to be talking about price. We're going to be giving price predictions, and we're also going to be going over all of the data of these protocols to understand, are these good investments for my portfolio? This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. Also give the video a free thumbs up. I upload every single day completely for free. All I ask is that you guys give the video a free thumbs up. And if you want, you can become a channel member by clicking the join button down below here on YouTube to learn more about becoming a channel member for as little as $1.99 a month. So we're going to be starting right here with Paul Atkins, the current SEC chairman, who is I don't even think breath of fresh air explains it enough. After the previous administration with Gary Gensler, he would not answer questions, like simple questions. Is Ethereum a security? He could answer, he just didn't answer. He would say, well, we would have to really look at it for multiple years. It's like, wait, hasn't the SEC done this? Like, what are you doing, right? And so we wouldn't be anywhere near where we're going in terms of tokenization, real world asset, and also just DeFi in general, because I want you guys to listen to the tone of what Paul Atkins is saying about tokenization. And then we're going to talk about why tokenization is revolutionary and going to make a lot of people very, very rich by investing in the right protocols at the right time with the right data. It's going to make millionaires. It's going to be the millionaire maker of the cycle. And I think tokenization is potentially going to be the NFTs of this cycle, right? The final push into, massive, massive speculative bubble, which eventually will correct. But, tokenization is more of for me, it's more of like a product, but it's going to be utilizing the underlying technology, right? People want to know, well, how is this going to affect the price of the coin? Well, if you have these things happening, right? If you have home ownership, car titles, car insurance, or whatever the situation is on the blockchain, and it's tokenized, right? So your home is a token on a blockchain. So you sell your home, you sell the token, right? The token transfers ownership. And so that's the new way of showing ownership, right? Or titling. And so that in itself is not a way to make money, right? You can't make money on a tokenization, on a token for a home, right? But the platform that is running the security for it, running the nodes for it, running the ecosystem for it, because tokenization is part of DeFi. Tokenization is effectively NFTs, right? I want you guys to understand that. NFTs are just tokens that transfer ownership. People view NFTs as like, no, it's different, it's this and that. No, that is literally what an NFT is. Some crypto projects call them colored coins, where they're not the underlying asset coin, but they're other coins that just move ownership on the platform. So that is what tokenization is. NFTs were the first iteration of tokenization, but now it's moving to a whole different level. But like NFTs in itself, right? A picture of a monkey was not worth $5 million, right? But what was the technology, right? The security of the technology and the underlying speculative bubble that created. That's what we're looking at here. And that's what we're looking at, right? The back end technology of NFTs is obviously very, very good. But what actually makes the money for these NFTs, right? It's not the NFT itself, although trading the NFT is great, right? But now a Bored Ape Yacht Club NFT is worth, maybe $30,000 when it was $3 million during the bull run. when they were very popular. But the point here is that the NFTs run on these blockchains. And so if you have tokenization occurring at very large levels, like home ownership or something like that, that is advancing the underlying blockchain, right? Because it's using resources for the blockchain. The blockchain has to secure it, et cetera, right? So that is where the money is. It's not in the tokenization itself. But when we understand, which we're going to go over in a few minutes here, which blockchains have real world assets, have the DeFi, you can see some are clearly undervalued from a price perspective and market cap, and some are highly overvalued. Anyway, let's listen to what the SEC chairman said just recently on CNBC. Let's put this at 1.25 speed. Don't forget to give this video a free thumbs up. Let's listen in.
Tokenization is an innovation, and we at the SEC should be focused on how do we advance innovation in the marketplace. And so I would argue here over the last several years, the SEC has been standing athwart efforts to innovate in the marketplace because things have been unclear. The rules have not been clear. Regulation through enforcement, that day is over. We are now, my whole goal is to make things transparent, from the regulatory aspect. Give people a firm foundation upon which to innovate and to come out with new products, and so that they know what they're doing.
I think there are two things to think about, Andrew, and that's tokenization of U.S. stocks, which is one thing which could drive a lot of cost savings for all parties
I'm not against tokenization.
and settlement times would be reduced.
I'm talking about if you wanted to tokenize SpaceX, which is a private company.
And then there's also access to private credit, I think you were mentioning, which is a complete individual investor access to private credit, which is also another sort of tricky area in that this is also, as you mentioned, it's not as much liquidity. Valuations are very difficult, particularly, I would imagine, for an individual investor. I mean, there are a lot of things here that are new frontiers for investors. Where do you stand on that?
Well, two questions. So as far as tokenization and other innovations in the marketplace to make trading and holding securities easier and with quick settlement, my predecessor pushed for what we call T+1, meaning settlement and clearance the day after the trade, the trading day. And so tokenization and other aspects of doing that tokenization in the marketplace is yet the next step to have much more efficiency in the marketplace and certainty of having a trade settle.
And by the way, like what they're talking about with the private markets and private shares, that's what we're seeing, right? Arbitrum just recently was chosen as the chain for Robinhood to tokenize stocks and also access to private markets that general investors wouldn't have access to. But Arbitrum is a layer 2 or built on top of the Ethereum chain. Ethereum is the settlement layer. And so by Robinhood tokenizing stocks, it's benefiting Arbitrum because they're utilizing Arbitrum to power the stock trading, and it all settles on the main base layer, which is Ethereum. And so you have Robinhood affecting Arbitrum and Ethereum. Now, we'll get to Ethereum in a few minutes, but I really want to kind of zero in on Arbitrum for a quick second here, because Arbitrum is a newer protocol, and we've been watching it fairly closely on this channel, whether we've done videos on it or not, I don't remember, but we definitely watched it very close. And I personally have been waiting for most of the coins to unlock because there were a few cliff unlocks of the coins because this is a fairly new protocol that occurred over the last couple of years. 2023. So we're about two and a half years into this protocol. And you can see massive price reduction, right? Starting at $1.30, peaking at about $2.50, $2.30, and back down to 30 cents. But a lot of this is because of the dilution of these coins that were unlocked. Now about half the supply is unlocked. And the token unlock schedule, while still somewhat concerning on a regular basis, right? Every single day they're unlocking $159,000 worth of Arbitrum. Every single day. It looks like it goes into the Dow Treasury. So that may not be that bad, but you can see that every once in a while, there's other allocations to the team, right? Where millions of Arbitrum are being released. So that's something to keep in mind, right? But I think that now Arbitrum is at this level that there may only be one way, which is up, right? Because if we start to see the transaction volume on Arbitrum significantly increasing, as we're seeing the rollout of this. This could definitely be a situation that we want to keep an eye on. Now let's take a look on Real World Assets website at Arbitrum to take a look, because 33 cents. I mean, you have to understand, like, this is an all-time record low for Arbitrum. It's been going down since it launched, and so anybody who buys today, right, you're at a lower cost basis than everybody else who bought in history, except for the early, like the investors who get unlocks from their early investments. So that's something to keep in mind. Arbitrum has $290 million of real world assets, $6.6 billion of stable coins on it. Again, this is a new chain with $6 billion of stable coins. There's blockchains out here that have no interoperability and no stable coins on them, which is quite unbelievable at this point, to be honest. But you can see USDC, they have $5 billion on the chain. Tether, $1.2 billion on the chain. And so what I would anticipate to see is Arbitrum transaction volume, transaction revenue, holders, and all of that significantly increasing as we see more and more deployment from the likes of Robinhood on Arbitrum. But that all benefits Ethereum. And that brings us to Ethereum and the Polygon ecosystem. Now, we've been seeing a lot recently, by the way, so with Arbitrum, for me, it's a buy. When I'm recording this video, it's a buy. I could be wrong on this. It is money that I can afford to lose, but it is a buy because we're at all-time record lows, and Robinhood just signed on board with Arbitrum. And I think it's only going to expand because, again, it's going to be cheaper, faster, more cost efficient, and on-chain, right? So with Ethereum and the layer twos like Polygon, keep in mind, we have publicly traded companies like BTCS announcing their intent to raise $100 million to buy more Bitcoin. Sorry, not Bitcoin, Ethereum, to buy more Ethereum and take loans out on Aave, on-chain borrowing via Aave to buy more Ethereum. So that is obviously risky, right? To take out loans to buy more crypto. But the fact that we have publicly traded companies buying hundreds of millions of dollars, by the way, also Bit Digital, which was a profitable Bitcoin mining company, they just completely dumped all of their Bitcoin and they completely ceased operations for their Bitcoin mining, and they're completely moving over to Ethereum. Why? Because Ethereum is the play now. Bitcoin, the trade is over, guys. It's over. It can still go on for a little bit longer, but it's over for the cycle. And now Ethereum is picking up, and the Ethereum layer twos and everything built out in DeFi, because this is what the banks can use. If you're a Bitcoin business, like a Bitcoin mining company, you have to understand they have to keep increasing their investments in new Bitcoin mining machines, more energy as time goes on. And so it's not as profitable as just running nodes on Ethereum and earning yield through staking. Can't do that on Bitcoin. And so companies like Bit Digital, they've already accumulated over 100,000 Ethereum, sold all their Bitcoin, and now they're moving to accumulating and staking Ethereum for a yield. It's crazy. Meanwhile, Polygon, right, which is the premier layer two, because Ethereum can do a lot that people want it to do because of DeFi, because of all the transaction, all the throughput, and Ethereum is an older chain. And so this is where Polygon, the premier layer two, comes in, because the team at Polygon is building a super fast highway of Internet of blockchains. There's two old ways people used to do this, and I'll pull up the graphics so you can see. One way is let's build lots of roads, each going in their own direction. That gives freedom, but it makes things messy and hard to use. Another way says let's make one big road for everyone. That's easier, but it gets crowded fast. Polygon's approach is why not build many roads and connect them smartly? They call this the ag layer, the aggregation layer, right? The aggregation of all of this info and data from all these different blockchains. It's a well-planned city where everything flows smoothly. That's how Polygon wants to help Web3 grow. as big, grow as big as the internet without traffic jams. And Katana, which is a DeFi chain built on Polygon and by Polygon, will provide liquidity for the whole system. So effectively, Ethereum is the base layer, the foundational settlement layer. But then you have Polygon built on top of it, Arbitrum built on top of Ethereum, right? And Ethereum settles everything at the end, but these other blockchains are able to do a lot more. And with the interconnectivity that we see through these, cross-chain interoperability protocol, the USDC cross-chain interoperability protocol, and the AG layer, it allows all of these other blockchains that do different things to connect with each other so that Polygon doesn't have to do everything that every blockchain does. It just needs to connect to a blockchain that can do different things. So if you need a different type of technology or smart contract or usage, you can just bridge over from one of these other layers. And that is what the AG layer is doing. And so when I look at Ethereum, when I look at Polygon, right, and I look at these combined number of protocols in terms of DeFi, when I look at, right, just between Ethereum and Polygon, you have 2,000 protocols built on top of it. No other blockchain even comes close. When you add their total value locked, obviously Polygon is very, very low total value, 1.1 billion versus Ethereum's 65 billion. But it's still a very big number, right? It's a lot. And again, if we look at Polygon, and so people are going to say, well, Cryptoviser, should I buy Ethereum or Polygon? Ethereum or Polygon? First of all, I don't tell anybody what to do on this channel. But the way that I'm looking at it is, if you see Polygon is all the way down here on the number 41, $2 billion market cap. And if you look at the other cryptos with higher market caps, you got Solana, which doesn't do nearly as much as Polygon. Tron, I mean, come on. Dogecoin, Cardano. Cardano doesn't even have interoperability, let alone stable coins. Polygon has almost $1 billion of stablecoin market cap, and it's a layer 2, $343 million in real world assets in terms of value on the chain. I mean, 2.1 million stablecoin holders on Polygon, 2.1 million. If we compare that to a chain, let's say Cardano, I don't even know if Cardano's on here, but let's see. Nope, Cardano's not even on here. So let's compare it to Solana. So 2.1 million holders, Solana has 10 million holders, right? So Polygon is a layer 2 with a $2 billion valuation. Solana has a $80 billion valuation, right? So 40 times higher than Polygon. And meanwhile, they only have 5 times the amount of stablecoin holders, basically no real world assets. I mean, Polygon has $343 million. Solana has $418 million. So why does Polygon have more? Because Solana was not focused on real world assets, on tokenization. They were focused on Haktua coin and celebrity coins and all these meme coins. That's what Solana has been focused on. Polygon has been building. None of those celebrity coins that launched over the last couple of years launched on Ethereum or Polygon. They all launched on Solana, every single one of them. And so from a price prediction standpoint, we've talked about this before with Ethereum. I'm thinking we're going to at least hit the all-time record high, which is a doubling of the price from when I'm recording this video, $2,500 to $5,000, and with the potential to go much, much higher, as we talked about. Companies are buying hundreds of millions of dollars right now. Now, it is minuscule compared to what the Bitcoin purchases, right? I mean, Michael Saylor's buying $1 billion sometimes in a week. So Ethereum companies buying $100 million, while still significant, it's not significant compared to $1 billion, right, in a week. So that's something to keep in mind as well. But there's a lot to say about what Ethereum and Polygon have built and are building, and all the interconnectivity there, because it's an ecosystem. It's not just a singular coin that does just basically as a store of value like Bitcoin. And so Ethereum, a doubling from here, I think is going to be fairly easy. Could go much higher, but I think it's going to be fairly easy. When we're talking about Polygon, it's a whole different story because I believe, based on everything we just discussed, Polygon is significantly undervalued, right? During the 2024 bull, I don't know what you're going to call it, alt season, the price of Polygon went all the way up to about $1.20 and then came down. So it's significantly down since $1.20. But I think a lot of the issue here is Polygon rebranded from Matic to Pol. And so it creates a lot of confusion. And I don't know how they're going to fix that. Maybe they need to remove previously Matic, because maybe by now people don't remember Matic. But I think that definitely had a part to play in it. But again, now as Wall Street is starting to focus on Ethereum, I think Polygon, and by the way, this is not the all-time record high. When Polygon was Matic, I think the all-time record high was around $3, maybe $2.50, something like that. Will we get back up there? I don't know. I'm looking more at the market cap than the price, because I think the market cap is going to tell us a little bit more about the potential for this coin than the price. Number one, Polygon is in a very unique position because Polygon does not have any coins that are going to be released. They're at full supply, right? So during the last bear market, they minted or mined their last coin. Now it's full. All the coins are out there. So there is going to be no dilution from the protocol, which is, you can't say that about pretty much any other protocol out here. They all have some kind of inflationary mechanism. Even if they do have a maximum supply, it's not all circulating. Polygon it is. So we know there's going to be no dilution. So this price, this 18-cent price, is the all-time record high and is the all-time record low, and is the cycle low, right? This is very similar to what we're seeing with Arbitrum. All-time record low, cycle low. And so when I look at Polygon and I look at Arbitrum, right, even Ethereum, I think that they're all going to do well because Ethereum is not at all-time record low, nor is it at the cycle low. But it is, I would say, it underperformed, right? But now that Wall Street is starting to focus on Ethereum, they're also going to be focusing on Ethereum's ecosystem. And the next big thing after Ethereum is Polygon or Arbitrum or other layer 2s on the network. And so Wall Street and businesses and companies are going to start looking at this, and whether they're publicly stating they're investing or not, I think that we're going to see investment. And I also think we're going to see a speculative bubble from the retail crowd as well. And so when you look at the tokenomics of Polygon, it's way better than almost every other chain that we talk about or don't talk about on this channel. The tokenomics are there. The development is there. The DeFi is there. It may not be the biggest DeFi ecosystem, but again, it bridges, right? Ethereum houses most of DeFi in terms of TVL and protocols, but Polygon, it interoperates with Ethereum. So I consider these two one of the same. Maybe that's wrong, but I mean, it is what it is. You can see more people use Polygon than Ethereum. The active address is 600,000 on Polygon, 450,000 or 70,000 on Ethereum. That's a big difference. And it is, besides Bitcoin DeFi, which I don't know how they get these numbers, but besides that, in the top 10, Polygon is the most active in terms of DeFi, even though it may not have the most TVL. That's because the money is locked on the other chains. It just bridges back to and from Polygon. And so Polygon, Arbitrum, all-time record lows, cycle lows. We're starting to see the rotation into Ethereum, which is going to pull the whole market up or push the whole market down outside of Ethereum, everything Ethereum adjacent or layer 2s. And so if Ethereum goes up to all-time record highs, the potential for Polygon to get in line and get into the top 20, the potential of Arbitrum to get in line and get in the top 20, I think is very, very high based on a lot of the factors that we just talked about. And so this is a big opportunity, right? I'm not saying this is going to happen. I'm letting you know like my thesis on the market and my price predictions. And so I don't know where the price is actually going to go, but I know if Ethereum does a 2x, and we do see a speculative move into these layer twos, and we see the metrics on these layer twos increasing, which is going to happen. I want you guys to think about this, right? Arbitrum and Polygon, their usage is increasing because of all their connectivity and all of the products built on top of them. Stablecoin usage is going to increase as well because of tokenization, because of the stablecoin bills, because of banks moving into DeFi and TradFi from TradFi, right? So stablecoins are going to increase. That just brings liquidity in the system. That brings velocity in the system. That increases the metrics of these ecosystems. And all of that is the underlying data which drives the price, at least from a fundamental perspective. If you're fundamentally investing, obviously a lot of people in crypto, they don't invest on fundamentals, they invest on pumpamentals, right? What is going to pump? But when I look at Polygon, no risk of dilution because all the coins are released. Arbitrum does have some dilution, but it's slowed down because enough of the coins unlocked for the insiders. So if they already sold, that's why the price is down. They already sold, right? And if they didn't sell, well, we're at much lower prices than we were. So the likelihood they're going to sell is also low. So I'm not as worried about the supply here. I mean, it's something to keep in mind, but I'm not as worried about that. But I'm also looking at the market caps, right? Arbitrum, $1.6 billion. And like I said, you have PP Coin, which does absolutely nothing, can do absolutely nothing, has a higher market cap by, double, more than double, both Polygon and Arbitrum. You put Polygon and Arbitrum market caps together, and PP Coin is still higher than that. Mind-boggling, right? And so where do I see Polygon? From a fundamentals perspective, I believe the market cap should be at least $20 billion. And you're going to ask, why? Well, if we look at the $20 billion mark here, it's Cardano. I mean, Cardano has nothing built on it. Hyperliquid. It's a DEX, right? There is no reason Polygon should be valued lower based on usage, stablecoins, interoperability, ag layer, layer 2 compatibility, all of these things. It should not be lower than this. This is the baseline. In my view, in my thesis, I could be wrong, but that's where I think it should be valued. Same thing with Arbitrum. And I have been watching Arbitrum since it launched, and I've been waiting and waiting very patiently, very patiently. And this may be the entry point, because these protocols, I believe, are going to benefit from Ethereum doing well. And by the way, it's not just these. Aptos as well. Aptos Network's real-world asset total value locked increased 56% in 30 days to $538 million, becoming the third largest real-world asset network after Ethereum and ZK Sync era, with nearly $420 million in private credit, $87 million in US treasuries, and $31 million in institutional alternative funds. And so I think I pulled it up. I guess I didn't. Let's pull it up. Aptos. So one of the things, Aptos is a newer chain as well. This is one of the chains that I have been also kind of watching, because a lot of the thing is I'm very nervous on this channel about investing in new coins, right? Brand new coins. I've told my viewers since the previous cycle, if the coin has not been around for 3 market cycles, 2 bear markets and a bull, or 2 bull markets and a bear, I'm not interested. Because again, they flood the market with all these coins, right? As we talked about with Arbitrum, right? Every single day, $156,000 is unlocked into Arbitrum. That's small. There's other ecosystems that's even more than that. And people who hold the coin don't even flinch. They don't even worry about it. I'm like, seems odd. But Aptos, you can see total supply is 1.1 billion coins. The circulating is about half of that. So we would have to also look at the token unlocks to understand, what it looks like on a regular basis. So every month, $50 million worth of Aptos is released. $50 million. And again, that's at current prices. If the price goes up, it's going to go up as well. That's every month. It's kind of a lot, right? You could say, well, the market cap is $3 billion and it's only releasing $50 million. It's a small percentage, which is true. It's about 1% of the maximum supply, which is basically 2% of the circulating supply. It's still inflation, and it's something that we have to keep in mind and be aware of, because in a bear market, very bad. Bull market, not as bad, but a lot of these coins are going to get sold off. So this is not only inflation, but it's also dilution, and mixed in with that selling as well, it could be an issue, right? So that's, but with Aptos, right? It's only been around since 2023, and we're basically flat almost to where we started, right? The coin started at $7, went to $9, came down to $4, went up to $18, came back down, went up, came back down, went up, came back down. But every time it goes up, it comes right back down. So that's something to keep in mind. But we are effectively at cycle lows and all-time record lows. So now this is the third coin that we're looking at. Cycle lows, all-time record lows. Polygon, Arbitrum, Aptos. Are these going to benefit from Ethereum doing well and the market shifting away from Bitcoin, at least for a temporary period? Yeah, I think it will. And look, Polygon has 2 million stablecoin holders. Aptos has 1.6 million stablecoin holders. So it's very in line with Polygon, right? In terms of users is more important than dollars, because dollars you can have one user locking in $500 million, right? You could have one user transacting $1 billion in stable coins. You really want to see more users, more active addresses on a regular basis, and also ever increasing. If it's just stable, it's also not good. So yeah, not as many real world assets, although the dollar amount is very in line. It looks like it's almost double what Polygon is, right? But Aptos is its own chain. It's different than Polygon, which is a layer 2. So that's something to keep in mind as well. But again, Arbitrum, Polygon, Aptos, cycle lows, record lows. Is it a buy? I don't know. So where do I see Polygon? Well, like I said, Polygon should be $20 billion in my view, based on the market in front of us. Arbitrum, I think that Arbitrum can also be between $15 and $20 billion. Again, a lot of this is going to depend on how much Robinhood actually uses Arbitrum's network, how much tokenized stocks they actually do. I personally think they're just going to keep expanding. I don't see any reason why these companies are going to test it now and then use it less. I think we're more likely to see more companies and like Robinhood tokenizing more and more on the blockchain, because it's going to be easier for them, cheaper for them, and more efficient, most likely. So we'll have to keep a very close eye on that. But yeah, I think Arbitrum, $15 to $20 billion as well. Aptos, at the peak, it was, let's click the market cap. At the peak, it was at $8 billion. So, that's basically 2.5 times where we're at in terms of market cap. But you can see that even though the price is kind of staying steady, the market cap keeps going higher, which is an interesting dynamic here for Aptos. But I would say $10 is probably fairly easy if we get this run up in smart contract, real world asset, and tokenization platforms, which we may or may not get. Because we'll also have to look at coins like Aave. Aave is leading DeFi for 3 months with $7.5 billion in a flash loan volume. Now, if you've been watching my channel for a longer period of time, you know that I have been in and out of Aave throughout the cycle. I'm not super bullish on Aave, but I'm also not super bearish. I'm kind of almost neutral on Aave. Aave is the premier DeFi ecosystem for lending and borrowing. That's for sure. We also know that Aave has had institutional interest from the likes of World Liberty Finance, which is the Trump family Cryptoventure. And what we've seen here, again, this is another not brand new coin, but it was, a 2020 DeFi summer coin. And you saw Aave went all the way up to $500. If we look at the market cap perspective, it's basically the same. All the coins are basically released. Circulating is 15 million. Total supply is 16 million. So basically almost all released. And you can see like a nice setup here, right? We had a nice floor that was built, and then the coin started to pump into what we call the Trump pump, right? What happened after the election. And we went from basically an $80 price, which is where I bought at, and we went up all the way to almost $400. And once we started to level out, I exited the position. Then we took a round trip back down to about $130, and now we're about $285. But the fact that, Aave is seeing such big volume, and again, these borrowing and loan protocols we have to be very cautious of, because loaning and borrowing is very, very prominent in bull markets. But in bear markets, a lot of loans can't get paid out, a lot of liquidations occur, and this can cause a lot of issues for a lot of different cryptos, including the underlying asset itself. And so in a bull market, these lending and borrowing protocols, they're probably going to do really well. But you do not want to be in these protocols in a bear market, like at all. And you can see that from the Aave chart during the, the last, look what happened. Bull market, it was doing great because borrowing, everyone wants to borrow and lend. Crypto is going to go up. Okay, here's some more Bitcoin. Give me more cash. I'm going to go buy more Bitcoin with that. And then they take that Bitcoin and then go get another loan and then buy more and get another loan. And then if the market starts to turn down, they can't pay the loans back and they get liquidated. And so these protocols, it looks like we haven't even really had a pump. This was like a teaser pump. Now we're starting to see, companies. Even I think it was, BTCS. They're going to be utilizing on-chain borrowing via Aave to buy more Bitcoin and raise more money, right? So whether they're doing that already or not, I'm not sure. It didn't really say whether they've taken out an Aave loan in their press release, but it's something to think about. And so the fact that Aave, right now, the market cap is about $4.3 billion, and it is the premier chain for all of this borrowing and lending. In the final run-up, the parabolic move to the upside right before the bull market is over or as it's ending, I think that we can easily see Aave in the $20 billion range as well, right? It's been number one for 3 months. 3 months it's led with flash loans. Basically, it says the lending giant commands $24 billion of the total $110 billion secured across DeFi protocols, representing over 20% of the sector's total value locked. Now, if we go to DeFi Llama, it doesn't necessarily show that, right? But I don't even see Aave here at all. Am I missing something? Maybe I am. Aave. I don't see that. Aave. Okay. So yeah, Aave has $26 billion. I don't know why it wasn't on the first page. It should have been. Let's see. DeFi TVL. Maybe I'm missing something here. Yeah, it says $26 billion, but here it's not showing that. That's very odd. Maybe it's a error with their website. But anyway, this could also be TVL of real world assets. It looks like most of it is locked on Ethereum. 23 billion is locked on Ethereum, then followed by Arbitrum, then Avalanche, Base, and Polygon, right? So yeah, you see Arbitrum is high up there in Aave as well. So we were talking about Arbitrum. So I don't know. To me, again, when you look at the top 20 protocols, right, or protocols under or in the $20 billion range, right? Are you telling me that Aave, Arbitrum, Polygon, and Aptos, none of them have more value and bring more value to the overall DeFi landscape and crypto landscape and interoperability, cross-chain communication, smart contract landscape than Dogecoin, which can do none of the above, Cardano, which can do very limited of the above, Hype, which is a DEX for literally just pump and dump hyping. Clearly, there is a disconnect in the valuations of these coins. And personally, I think these coins getting to $20 billion is going to be easy, right? Which is only for most of these coins that we just talked about, anywhere from 4x to 10x. I mean, I don't see how you would think that Dogecoin would get to like a 4x from here would be $100 billion. Now, this could happen because it is a meme coin. People have fun with it, all that stuff, right? But remember, Dogecoin is inflating by 5 billion coins every single year, which is dilution. There's less and less interest in it as more and more interest is pushed into the coins with actual fundamental value that Wall Street can actually use and tap into. And so I think that there's just we also haven't seen a shift in these coins, right? We haven't seen a shift in the top 10, top 20, or top 30 for real this cycle. Very few shifts. And this is also very odd for the crypto market. And so I think that as we're ending this bull run, right, entering the end stages of this bull run, I think that a lot of things are going to go back to the fundamentals. And when they go back to the fundamentals, I think that we're going to have a shakeup of the top 20, top 30 cryptos. And these coins that we're talking about in this video, and again, we can't talk about every single coin in every video that we're talking about here, especially from a price perspective. But I don't see how it's possible for Polygon not to reach a $20 billion market cap, 10x from here, which would bring us up to $1.90, which, by the way, is not even at all-time record highs. If you look at Matic, the all-time record high is between, I think, $2.50 and $3. That's still a 10x from where we are, though. Arbitrum, newer protocol, has had value destruction since the coin launched. A lot of this is because of unlocks that have occurred. But the chain is a layer 2 built on Ethereum to settle and was chosen by one of the largest financial firms for retail trading in the world. And they're tokenizing things in Europe right now. But imagine what's going to happen when they open up the tokenized stock trading on their, and they don't, it's not about present, like if you're a user of Robinhood, you may not even know that you're buying a tokenized stock or know what a tokenized stock is. The point is they're doing it on the back end. So if you're buying the stock and they're utilizing Arbitrum, how is that not going to improve the fundamentals, the metrics of the network, therefore increasing the value of Arbitrum? It's a good question to ask. And so a 10x from here would be $16 billion or $3.30, a new all-time record high for Arbitrum, and totally possible in my view. I could be wrong. Don't listen to what I'm saying. I'm just giving you guys my opinion and my analysis of the market. And by the way, by the time you're watching this video, my opinion may have changed. And so this is really about understanding the thesis behind where and why I believe these coins are undervalued and why I think that it's possible for them to go to these levels. Aptos, we talked about this also, it's about a $3 billion market cap right now, but everything that we talked about that's building on Aptos and the fact that, Aptos has already increased its real world asset TVL to 56%. It increased it by 56% in 1 month. In 1 month. And it has very similar stablecoin usage and holders as we're seeing on Polygon and double the real world assets than Polygon. So looking at Aptos, and by the way, I'm looking at all of these individually. I'm not really trying to compare when I'm thinking about the price perspective, but I think getting to $20 billion is totally possible, which, let's see, 20 billion divided by 2.82, so that's about a 7x. So 438 times 7, it's a $30 Aptos, right? Just to get to $20 billion, just to get in line with the top protocols that are actually producing and have the actual on-chain data to prove their spot. And then you have Aave, which is already interest from pretty much Wall Street and World Liberty Finance, the premier lending and borrowing platform that's been around for multiple years and multiple cycles and had a nice base being formed during the bear market. And now we're a little bit higher than that, but we are starting to see the loan situation picking up, stablecoin situation picking up, on-chain governance picking up, publicly traded companies going to use Aave to borrow money to buy more crypto. In my view, this is all very bullish. Very, very bullish. Now, where can Aave go? Aave is already a $4 billion market cap, right? And I'm saying the same thing for this coin. I think getting to $20 billion is going to be probably the next milestone. And so that's about a 5x from here, which is a $1,430 price. Now, again, this is risky, but if you look at these charts, this is either a top of the market and we're going into a bear market, or this was a local top. We bottomed back down because there was some profit taking, and we're going back to where we were, at least to here, if not higher. And so with that, I want to know what you guys think about Aptos, Aave, Arbitrum, Polygon, and the other coins that we talk about on this channel on a regular basis, but maybe didn't talk about today. Like, where do you think these coins should be valued at? Do you think that we should just take into account stable coin usage, active addresses, total value lock? Like, let me know what metrics you're looking at, what prices you think these coins are going to go to, and also talk about other coins that we didn't talk about in the video. And let me know which ones you want to talk about and potentially talk about price predictions in the future. Other than that, don't forget to give the video a thumbs up, hit the subscribe button. That way you never miss a new video. I'll see you on the next video right here on the Cryptoviser podcast. Invest responsibly, do your own research, and crypto on.